We've got a decent amount when it comes to M&A this morning. Let's start with U.S. Steel. Of course, it's a company that we've been following here for some time, given it put itself up for sale back in, let's call it, what was it, late August or so. It had received a unsolicited bid from Cleveland Cliffs. The deal, though, I think it's surprised a lot of people in terms of the price, and perhaps even the buyer. It's Japan's Nippon Steel, and the price tag is $55 a share in cash. You can see, of course, the stock is up dramatically, and this is off of what had already been an elevated stock price, with the expectation being you would get a significant price here. We'd reported last week that there were a number of bids well into the 40s, but frankly, 55, I don't believe many had anticipated that the price would get quite that high. They are Japan's largest steelmaker, one of the largest in the world. There's no real synergies in terms of at least cost to speak of here. So, you know, there may be some technology improvements over time that can be made on both sides. They will honor all the agreements, they say, between U.S. Steel and its unions. More on that in just a minute. They're going to keep the headquarters in Pittsburgh. They'll retain the name as well. But again, it really is the price tag there, even with the lack of synergies. Now, Nippon Steel and its advisors will tell you, well, we're only paying 7.3 times trailing 12 months EBITDA, which is in line with other assets in the steel industry that have been acquired. But it is higher than many had anticipated, and far higher than even the cover bid for this deal that I'm aware of. Now, back to the unions, because there was a question here, and initially we saw in the press release, they have two unionized plants, Nippon does, and they're very small presence in the U.S. And on an antitrust front, really, there doesn't seem to be much impact, because domestically they have virtually no significant share here, unlike Cleveland Cliffs and U.S. Steel, which did represent a significant potential antitrust challenge. But there may be a challenge when it comes to the unions. We just got this, Sarah, a press release, and I'm excerpting one part of it. The USW, that is the U.S. Steelworkers, does not believe that Nippon understands the full breadth of the obligations of all of our agreements, and we do not know whether it has the capacity to live up to our existing contract. That one part of a press release that went out a short time ago, in which the headline is, they slammed Nippon plan to acquire U.S. Steel. All of this could just be an opportunity for negotiation, for example, but it did take the stock price down ever so slightly.
Also, Cleveland Cliffs just issued a statement. They were on the losing end of this.
Yes, they were.
But they say that, you know, they identified U.S. Steel as an undervalued company. They're congratulating on them on the deal, saying even though they decided to go in a different direction with a foreign buyer, the move, they say, validates their view that the sector remains undervalued by the broader market. And
Cleveland Cliffs is benefiting right now from the fact that they didn't end up buying it. Their deal was cash and stock, and so the stock may have, as a component of it, perhaps there was some pressure that might have been applied there. Question, of course, continues to be as well, Sarah, will they go out and look for another asset? Because clearly, under their aggressive CEO, they've been looking to acquire. We'll do Alumina Grail later, move in the other direction with the sale of or disposition of Grail from alumina.
Yes, that's been a saga.
Oh, my Lord, what a saga it has been, and not a good one.